The Fed's September policy meeting was definitely one for the books, as Chairman Jerome Powell announced the FOMC's opposition to the changing of the interest rate, at least throughout 2023. Now, this means at least 3 more years, 12 more quarters, 36 more months of a time wherein credit costs nothing. This wasn't a unanimous decision, nevertheless, it paves the outlook in terms of the FOMC and monetary policy in terms of the near future. Right, but now the question remains, what does this mean for the stock market? Firstly, I'd say it motivates the continuation, if not the escalation, of increased borrowing from blue chip firms or firms in general, such as Apple, which then actually uses money to go on and further fund stock buybacks. Secondly, it also beguiles consumers into taking out larger and cheaper loans, in turn having to spend it on increasingly larger and increasingly more expensive goods, consumable goods such as cars and pickup trucks, as seen in the US. Interesting example. Ultimately, we know that capital seeks return. Now, whether or not this will come in terms of capital return as per the asset price inflation resulting from stock buybacks, whether or not this will come in terms of income return as per dividends after the consumer's loans get siphoned into the revenues of the companies, or whether this will come actually in the capital gains as per hedging against inflation, for example, like gold. I'd say one may observe this sooner than we may expect, right? Costless credit and its longer term effects isn't something that we're necessarily going to be able to put into a few bullet points in terms of its effect on the stock market. First of all, I think we may not even know all of them. We're soon to find out. But exactly, over the next few weeks, months, and necessarily years, we will study these effects, and I guess then we'll discover what it means to live in a world where non-existent nominal interest rates. All of these things, they're examples of what has occurred recently, happened over the past few months, this year specifically. But what has happened this week? Well, just this past week, obviously, a defaulted company in California was actually given a green light, the go-ahead by the state authority to sell $53 million worth of debt. Now, what was their unique selling point? Well, they're selling green bonds. And on that note, have a great week, everyone.